What's up, guys? Welcome back to another episode of Filling Your Cup. I'm your host, David.
I'm your other host, Calvin. What's up, y'all?
And today, I think for this week, we're gonna do a different segment, and we're gonna call this our monthly portfolio recap. So basically, we're just gonna talk about what we did in the course of the month in our stock portfolio, like what we bought, what we sell, and I guess go into a little detail of why we did what we did. So before I start, I just want to kind of show what I'm working with. So this is like a G sheet I created to track what my positions are, my profit and losses, right? So you could, like, if you use any brokers, you can definitely see this by just downloading like your transaction history. But I kind of format it in a way where I can, like, easily see my P&L for each month. So it just kind of give me a little visual of what I'm working here for the year, right? So like, tax implications and whatnot. So this is basically a pivot table that I created, and it's just pivoting from, I have two pivot tables, and one's pivoting from my Roth account, and one is pivoting from my non-Roth, which is just my regular brokerage. And you can, and yeah, this basically shows me what I've made a loss in the course of the year, basically. So if you look at the pivot table, right, in September, in June, right, I took a pretty big hit with this UGAZ, which is like 3x ETF. So I did mention before that I do trade some risky instruments, if you want to call them, and this time I got burned bad. Like I got burned bad. So it does happen. I mean, I'm not afraid to share my losses because it's a lesson learned. I got greedy. I thought I was gonna make some quick bucks on it, and I didn't, and I didn't sell in time. So I took a pretty substantial hit, right? I lost 9.4K on this. But hey, shit happens, dude. Like it goes on. So sometimes you just gotta like make better trades. So I'm gonna go first of what happened in September. So September I did sell some stocks I've been holding. So one of the big ones is Roku. So I bought Roku pre COVID. So I bought this I think I bought this around I think December. I bought it around December, around like 136. No, I bought it around like 130. Then it was slowly steady going up, right? After their first earnings in I think they released before COVID. It was like February. It hit a high of like 160 something. So I was like, yo, it's pretty green, right? I could have took the profit. I didn't take it, and then COVID hit. I had a chance to sell it also, but I didn't sell it. So I held this baby down to the lows of the year, which is I think like it was like $80 or $90. So I held it all the way down. So that's why I'm a big advocate of taking profits, because I don't want to see all my gains gone. And at one point I was losing money on this stock too, when I was supposed to be making money, right? So it is what it is. So then as COVID, was passing by, I bought a little bit more. I think I bought a little bit more at 120, which brought my average down to like 128. And then it hit a high again of 160 something. I didn't sell it, and I was like, yo, this time I'm gonna hold on because I want to be a long-term investor, right? But then this bad boy, it dipped to 100. It dipped down to 100 again. I was like, yo, I don't know if I can keep taking this, because I was up like $2,000-$3,000, but then I didn't sell, and then now I'm down again. So finally, when this bad boy hit a high of 185, I was like, I set a stop limit. I forget about it. It hit it, it sold it, and it cashed me out at $8,000 gain. So did pretty good myself. But then after I sold it, right, it hit a high of 200. So I missed the next $15 up. So, and this happens when you take profits, because you can either feel really good about your trade, or you can feel like, hey, I left a lot on the table. But you know what? I already missed it 2 times around. I was like, yo, I don't want to miss it again. So I took the profit at one. We took a look at my Roth transaction. So I sold it at 185, exactly 185. Boom, and that's how I got the $8,000 gain. But then so yeah, that was like one of my biggest trade in September. But also in September, I did buy a few other stock. I bought P10, which is their like the, so like, Cam, what exactly is P10?
PTON, ticker symbol. So it's Peloton Interactive. It's a it's a good, it's a bike. It's an exercise bike with a big screen. That's their main product. Right. Their bike is very expensive bike, and they have subscriptions, monthly subscriptions for their classes, for their interactive courses, and to join their kind of like community of
It's like
bikers
cycling, right? Kind of.
cycling. Yeah.
So
Um,
like the reason I bought this, right, is because
yeah.
basically Calvin kind of introduced Calvin and this other friend we know. He kind of like they were talking about the stock, and they're talking about how this could be like a really big deal because everybody's in quarantine and you can't go. Gyms are closed, so there's no way to exercise. And this kind of like cater to like the top echelon of like the workout fitness people, right? Because there's a lot of people, fitness people out there who wants to do fitness and they do have a lot of money. They have the money to do it, so they would probably invest in they would probably invest in those bikes and whatnot. And you know what? And I was like, I took a chance and I said, you know what? I'll buy it. I just took a chance because this stock was trading at a high of I think it was 88, and then I saw a drop, right? I saw a drop for like 2 days, and then I finally pulled a trigger. I bought it at 83. But of course, after I bought it at 83, right, it dipped to 72. So looking at it from hindsight, you're like, oh my god, like I could have just bought it at 72. But you never like the thing about stocks is you can never time it. So if you were gonna buy it, you can always just buy it in a little bit and then average up or down depending on where it goes. So if it goes up, you can average it a little bit more. If it goes going down, then you can average it a little bit more. This only strategy only works if the company is if it was like a really good company, right? Because you don't want to average down on a company with like a shitty company like the one that lost like $9,000. That was just like an ETF. That's not in a company. So you always just trade what you think is a good company, and usually if the good companies is usually you can tell it's a good company if they make money. That's kind of how you do it. Like if they make money, like they make money, but then like if they don't show that they make a lot of money, but it just means that they're probably investing it in the company. So like Amazon, for the longest time, Amazon reported like no earnings, but then they're just basically reinvesting in the company. So that's how they grew to this behemoth that we see today, right? So yeah, so that's kind of like how I found the stock is because Calvin and our other friend was talking about it, and I just took a chance of it. So if you look at my transaction, I bought it at I bought 100 shares at $83, and then I sold it, and then you know like me, I like to take profits, man, and I just one day I said I'm gonna set a sell limit at 98. If it hits that, I'm getting out. Be whatever, that's good enough. So I set at 98. And of course, I think over the course of like 2-3 weeks, right? Because I bought it at 9.3 and then or 9.23, it hit 98. And of course, after you sell it, instant regret, right? I sold it at 98, boom. And then over the next week, basically, it hit a high of like yesterday, it closed at 108. So, hey man, sometimes like when you take profits, that's what happens. Like if it keeps running, then you'll miss out. So that's why there's a difference between a trader and an investor. And right now I am being a trader because how I see is I have a couple of losses for the year, right? And those losses, you know, they amount to a certain X amount of dollars. So I feel that if as long as when I sell a stock for a profit, it I don't need to pay so the reason why people don't like short term, right? Because one, they have to they're scared that they might miss out on the potential gains on the stock. Like I did, like I sold at 98, it hit 108, so I missed out $10. So that's one. And number two, people don't want to pay capital gain tax, right? If you just buy and sell it with less than a year, then you're gonna pay capital gain tax equal to your ordinary income. So a lot of people don't want to pay taxes on that, but since I have losses in the year, I can offset the loss with the gain. So I'm trying to net it out where it's like, you know, as close to zero as possible. And then maybe then after that, I will start holding my positions for, you know, at least a year so I can get the long-term capital gain tax treatment. But for right now, I don't mind taking some profits because I have losses for the year. So I'm just going to sell it and then I'm trying to recuperate my losses. But also if you look at here, you can't see it here, but then in actually in October, I actually bought the stock back because you know, I saw it dip a little bit. But then that's actually no, I did not buy this back. I am not in P10 right now, so that's it for me for P10. So, but if you look at my other trades for the month, right? I bought some Tesla. I bought some Adobe. I bought some Roku. I bought some TTD. So as you can tell, I'm really big fan of tech companies because like kind of how my friends say it, like it's easy, money is easy come and easy go, right? So tech stock is really volatile right now. So every time when I see a stock dips, and I see it as like an opportunity to go in. You can never time it, but that's kind of how I see it. So for example, right, TTD, I bought it at 441. But of course, after I bought 441, the stock dips to a low of I think like 410. So in my mind, I'm like, yo, dude, I missed out on $30 per share. I mean, but you can't really think that way because then right now I think before Friday, because then Friday's when Trump we're talking about strategies as well, but Trump kind of announced that he had like COVID. So on Thursday, right, TTD hit a high of I think five. Take a look. TTD hit a high of I didn't hit a high of 560. So technically I'm making pretty good money on TTD, and that's because I'm doing the strategy of I'm buying and selling because I'm gonna hand this to Calvin in a little bit, but then like if you look at my P&L for the year for TTD, right? TTD is one of my best gainers. If you look at it, I made like $9,000 on TTD, so that's it's not. I mean, it's good money. You know, I'm not complaining, but I definitely could have made more because again, a lot of my positions I'm holding it over COVID. I did not sell before COVID happened, so that's why like over COVID I was locked in a lot of positions, so I don't have a lot of cash to buy the cheaps, right? Everything's on sales in like in March, so I didn't really have enough money to buy it. So now I'm just kind of like I'm starting to sell my positions and take some profits. So yeah, so that's kind of like my P&L for the month. But yeah, Calvin, what about you? What how's your portfolio looking for the month?
For a month, man. So not as elaborate as yours. I already bought two stocks. First of one of them, which you actually both of them, which you already mentioned, Peloton and Tesla. Um, I, I like your strategy, right? You're riding the wave, selling at the highs and buying the dips. That's awesome. That's great. But one of the most successful investors all time, Warren Buffett, buys and holds, buy and hold. So, um, I'm going towards that strategy right now, buying and holding long. Because I don't have to pay the short-term tax if I sell, and B, if I'm really bullish on these two companies that I bought, which I am, and I'll tell you why later, it should be trending up and up and up. So Peloton, as you mentioned, Corona hit, people are working inside. They saw a increase of subscribers by like 100%, over 1 million right now, over 1 million subscribers, and will probably keep trending up. So that's good. That's good for the company. That's good for their bottom line. That's good for profits, income, etc. And they beat earnings recently, and I should expect them to keep going on with that for at least the short term, because Rona is not going anywhere soon. And as you heard, President Trump got it, and there's no short-term vaccine yet. So people are still working out indoors or at home for sure. Next one, Tesla. Okay, so Tesla, very, very volatile. So I can see why David's strategy is working right now. So if buying the lows, selling the highs, and play off that volatility short term, that may be the play right now. But again, I'm still bullish on Tesla, from their autonomous taxi network, from their million-mile battery packs, from their gigafactories and autonomous driving, space travel, you name it. I think cars are going into the future. And if you watched our previous video, we talked about how electric cars are going to be the future, especially in California, 2035. So that's only going to benefit Tesla more. And yeah, so buying and holding. suffering from the short-term dips and waves because it is very volatile right now. But that's strategy I'm going for.
But
How
yeah,
about you,
I
Dave?
mean, but like yeah, like we mentioned before, there's two type of I guess investor. One is like investor and one's a trader. So right now I'm more of a trader when it comes to some of my trades. But don't be mistaken though. I'm still holding long in a lot of positions though. Like for me, I'm holding long on Facebook. Facebook, I'm holding long. Uh, I think Tesla. I'm gonna be holding long on this one too. I mean, it's a tough pill to swallow because if you look at my when I bought it, right? I bought Tesla on 923 for 411. It hit a high of 460 ish on Thursday, right? But then of course when President Trump announced that he got COVID, the whole market tanked. And what took the hit worse was Tesla. I think Tesla lost like 6% for the day. So it brought them down all the way down to like 415. So I think I missed out on a couple $100. But long term, I am not banking on Tesla. I'm not banking on Tesla. I believe in Elon, and I think Elon is the future of whatever Elon does. I think is gonna be profitable because like what he's doing is good for humanity. I don't think he's really in it for the money. He's in it for like the unknown, right? And he wants to make the world a better place to live. Because if you look at what Elon has done in the past, he built like factories, like solar factories in like third world countries, like provide not free electricity, but he provide renewable electricity for these like poor countries, right? So he's a humanitarian. He does like really good things for like the world. So that's why I'm a really big fan of Elon. And this is a little way that I can show my support by investing in his company. Of course, I wish I bought it at 400 before they did the split, right? Because like Tesla was like 3. It was like the lows was around 3. Let's just say 400 over COVID, and it shot up to freaking like 2.2K. So I'm buying it at a freaking premium right now. So I should have believed in Elon before, but like I said, I did not have like the capital to do it because everything was locked up. But since I sold some stuff, then I was able to get some money out. So that's why I was able to buy it. So but yeah, so this is kind of like our recap for the month of September of what we bought and sold, right? And a great since I am doing a little bit more of the trading, the swing trading side. There is like you can never time the market, right? But there are always opportunity that knock. So for example, on Friday when President Trump, it was on Thursday night. On Thursday night that we I think he tweeted out that he his wife and him, like they tested positive for COVID, right? So in an investor mind, like we all knew, like we looked at the futures market. So the futures market is basically what just like it tracks what the futures look like. So if there's a lot of sell order coming in, then it's gonna show that the market's gonna be red for the day, right? So if you look at futures, the futures are already down like 200-300 points even before the market opens, right? So you can already kind of tell the market was gonna start low. So that would have been a really good time to buy in the market on Friday, because that's why you always want to have some spare cash on the side. So when things go on sale, you can buy in, because we all know like this is kind of major news, right? If President Trump has COVID, it could imply many different things, right? Everybody's painting like all the worst thing, right? Everybody's a pessimist, like they don't know what's gonna happen to the market, but it's not a good thing if you get tested for COVID, right? So the whole market was gonna dip, but then so that's like a good opportunity to buy in, because I mean, you're still investing in the stock market. Like I said in our like really long video ago, it's kind of gambling. It's risky. Everything comes with a risk, right? You buy stocks, you buy a house, you buy anything. That's kind of investing. It's somewhat of a gamble, but it's about coming up with a strategy of and stick to that strategy. So like for example, if you buy really good tech stocks, okay, I'm not gonna say tech stock. If you buy really good stock with a good fundamentals, like they make money, they're like a staple, kind of like McDonald's. Like McDonald's like a staple, right? Like that stock is not gonna like explode in growth, but they'll constantly make money. Because they're kind of like recession proof. They're kind of COVID proof, kind of. I mean,
everyone's got to eat.
Yeah, everyone's got to eat. So But then like for us right now, I think tech is kind of like the sector to be in because the growth in tech is freaking exponential. Like if you look at a lot of the stocks in tech, it shot up 3, 4, 500% over COVID. So that's why it sounds like gambling because you're not really investing in it for the long term. You're kind of just trying to get in and out, which is not bad. Like this is how people make a living. Like they trade the market. So that's what I'm doing. I'm more of a swing trader. So I'm right now it's working off so far for me because like I'm making some money, but I do want to hold long for some of my stocks because a lot of time like regular citizens, right, regular civilians like us, right, or I don't know if I say it right, but we don't want to just always stare at the market and like be anxious. Like you don't want to always just stare at it and like be so nervous because then like you're not gonna sleep well, you're not gonna eat well, you're gonna always just be stressing the fuck out. Like real talk. That's what like for me when I because I was a swing trader, right? And when I buy my stuff and it goes down when it dips, I'm just like, oh fuck man, I should have not bought it. I should because I'm trying to swing it real quick. But if I'm like a long-term investor, and if I bought like good stocks, like if like for example like I bought Amazon, but I sold it. So I bought Amazon at like 1,600 and then it dipped to like 1,500. I was like, oh man, like oh dude, I don't feel good, right? But then I was like, I know it's a freaking good company, right? Because who doesn't use Amazon? And then I messed up and I sold it at $2,000. I mean, yes, we all make mistakes. I sold it at $2,000 when I think if I just waited like a month, I could have got it at like 3.5. But it's neither here or there. We all make mistakes. So it depends on what kind of stock you buy. So if you buy really good stocks, you're not gonna feel bad. You're gonna feel like it's gonna recover. Still a risk, still a gamble because anything could happen to Amazon, right? If let's say if some I don't know, I don't wanna like spread rumors in it, but if anything, like if they were do some shady things and then the whole market sentiment don't believe in Amazon anymore, then the market then they could technically dip or whatever. But Amazon is like one of those companies where it's not gonna go away anytime soon because there's no more brick and mortar stores and everything you have to order. It usually comes in from Amazon, right? 99% of the stuff you order online is kind of from Amazon. So if you buy really good companies, it's not gonna you're not gonna be stressing about it, and you're gonna make some money. But yeah, like for Calvin, he's more like he right now he's more like a long-term investor, right? So do you sleep better at night, Calvin? Like since after you bought your positions and you're just holding it, do you sleep better at night? And do you also constantly still think about your trades though?
Oh, definitely. Yeah. I mean, but when you buy and hold, you think of the long term, you think of the future, you think of the growth and the possibility of what the company is trending towards. So I sleep better at night, knowing that what in like 2, 3, 4, 5 years, what that money's gonna grow into. However, I do check the market every day. I still read the news and check the volatility, and that does put a rock in my shoe at times. So long term, yes, I sleep better. Short term, if I think about it too much, think about constantly, oh, I could have bought it this day or that day. I could have gotten at an earlier, a better position or a low or a dip. I could have made a little bit more money and things like that. So, yeah, long term, I sleep better.
Yeah, I mean,
and it all depends on you guys' goals too. Like, what are you? Do you need money now? Do you need money later? Are you investing for retirement? We're all different, just two examples.
Also think about like the situation though. So you think about it over COVID, right? No one thought COVID was gonna do this kind of damage. But so if you think about it this way, that's why I like to take profit too, right? Because like pre-COVID, everything was looking good. Everything is hitting all-time high. But then like over COVID, the first 2 months, all the gains from I think 2018, 2019 was wiped out because just over the course of 2 months, right? So that's why I'm a believer of taking profits, because like if you took profits near the top, or you can never get time the top, but if you took the profits near like the highs, then then you'll feel a little bit better. But then like of course you don't know COVID's gonna happen. And even with COVID, it's kind of like people thought it was like the flu, right? No one thought it was gonna close down the whole economy. So So I think this is kind of like one of those extreme case where, for like if you took profits, it made sense because you would have made off like a bandit, and then if you were able to buy back in at the lows, you would have 2-3x your money like easily, I think. But that's you can never time. So do I think there's another like will there ever be like another COVID again? Maybe like 10 years from now there might be another COVID. I don't know, but in the near trading terms, right? Because like also our economy, our market has been on a bull run since 2009 or 2008. So it's been a bull run for like 12 years, and the market cycle is usually every 10 years. So we've been on a really crazy bull run, and everybody thought like a correction was imminent, right? So I don't know, like I don't know if the correction in February and March was that the correction that we're talking about, but I think right now, at least in tech sector, the tech sector looks really strong, and I think a lot of people are pumping money into the tech sector because tech is the future, and tech is like the only sector where like the growth is like you could really say it's exponential because I don't know, like these evaluation for these tech companies is fucking crazy, but if people believe in it, you can't go against the grain, right? So like if the market sentiment say yes, we're really bullish on tech, there's just you can't really go against it. So you kind of just have to ride the wave, like you said. So, but yeah, that's why that's why I was a big fan of taking profits. But of course, I'm gonna go long on some positions too, because like for me, I'm holding Facebook because one, I fucked up. I didn't sell at 300. I wanted to sell at 300. I thought about it selling at 300, but I didn't sell it. And then right now it's 260. So I kind of like lost. So like if I sold at 300, I would for sure buy it back right now. But then since I didn't sell it, I'm not gonna sell it now. So I'm gonna hold it. So that's a trader in me. And then so yeah, that's kind of like I know it's kind of like going long is kind of like the better strategy overall. If you think about it, if I look at all my trades, right? A lot of like for example my TTD, a lot of times I sold it, and then it goes to new highs. But then the key thing is it usually always like corrects itself because sometimes it moves so fast. People get tricked into like the hype, and then it usually always dips. I'm not gonna say every stock is gonna correct, but history, if history ever taught me anything, that trends, trends kind of tend to repeat itself. So corrections is meant to happen, and there's always if a stock is really running really high, for example like Zoom, it ran from 200 to 500 like over COVID, right? Actually, no, it went from like $70 to like $400 over COVID, and then like and people are like, oh dude, I missed out on Zoom. I should have bought it, blah blah blah. But then if you look at it, if you look at the last month chart, it actually dipped down to like $220. I thought about going in, but I was a little skeptical too because Zoom, I thought COVID was kind of maybe near over, but it doesn't look like it. And Zoom is kind of like the choice of communication right now. So right now it rolled back up to 500. So there's always going to be opportunities out there. Just keep an eye out on it for it. Of course, you can never time the market. I mean, no one can time the market, but there are opportunities. Like I said, like just for example, Friday, that could have been an opportunity to buy in. Like the market didn't dip as much as I thought it would. I think the overall market was, it was down like 300-400 points, and then I think the biggest loss was probably Tesla at like 6%. So technically, you could have made, you could have got in at a 6% discount. I don't want to say a 6% profit because Tesla could easily keep dipping on Monday. Like, I mean, you never know. But there are opportunities for you to buy in. So I know this video is a little long. And this is our first type of video doing this. If you want to see more of our monthly recap, I mean, comment below. I mean, just let us know if you want to see this, and if you want to, you want me to share, I guess like this G sheet that I created of tracking, how to track my position. Let me know, and I can do like a run through and show you like more details of what this G sheet actually provide or what information it can tell you. So I think it's really useful, right? Because I'm looking at my P&L and I'm saying like, hey, I made some money here, I made some money here, I made some money here, I made some money here. I mean, it's good. It makes me feel good. It makes me feel like, hey, I made some money. Like, of course, it's gonna show me these too, like the money I lost. But I think over the year, I think I made some money. Like this year, like I said, this year was not as good as last year for me because last year I was in it at the bottom last year, and I never rolled to the top. This year I was at the top, I rolled it to the bottom, and then I rolled it back up. So technically, I missed out on the dip and the rebound because right now I'm only selling on what, because right now the market is higher than pre-COVID for the tech. at least. So yeah. Any closing thoughts, Calvin?
Yes, please do your due diligence, do your own research on your companies. We're just two guys on YouTube sharing our experience. Please, it's your money, is your investment, your nest egg. Please do your homework.
Yeah. Don't. This is not an ad to buy or sell these stocks. We're just showing you what we bought. And I feel like this is pretty genuine. Like, I mean, this is actually my trades that I pull off the internet. I'm not faking this. So, but then if you want to make us maybe have us make a video of in a more in depth of which stocks we buy or why we bought it or when we bought it, we can do that too. But for now, I think we're gonna do this video where we recap our trades on a monthly basis, just to show you what we made. And again, I know these videos been kind of long. Like I feel like I do tend to ramble, but I like to talk. What can I say? So yeah, I guess this is what we got for this week. And please like, comment, subscribe, and we'll see you in the next video.
Peace.
Peace. And